So what do you think? You look at valuation, Sylvia, and there's no secret they're quite elevated, and obviously markets look ahead. The question is, how good really can the future really be?
Yeah, definitely agree that valuation looks stretched on a PE basis across the major equity markets, especially in the U.S. But we do think this year, if we look at equity returns, it would mainly be earnings-driven rather than valuations-driven, as we've seen last year. And so far, I guess, looking at the U.S. earnings season, we have pretty strong numbers. And looking ahead for this year, we do expect global growth to be above trend, and that should really bode well for our earnings outlook this year.
Any place in particular, and I'll leave that very open-ended for you, across the region, across the world, that stands out to you as far as that positive earnings story might be concerned?
Yes, overall, we do have a pro-risk stance in our multi-asset portfolios, and we express that throughout overweight equities and credits. So within equities, we have a preference for the cyclical equity markets, so pretty diversified exposure through U.S. small caps, emerging markets, Europe, and Japan. So quite a broad exposure there.
Sylvia, we talked about how it is about chasing momentum, and you can't afford not to, even though valuations remain stretched. But given that everything, pretty much all the good news has been priced in, what would be the next catalyst?
I wouldn't say all the good news has been priced in. I guess in the near term, we have seen some concerns probably on the virus front with the resurgence we've seen in Europe and the US. And also there have been some concerns on the vaccine rollout as well. I think there's still some near-term uncertainties that we could see cleared up later in the year. And we do think probably in the second half of this year, we could see that pent-up demand being released if we do see good progress on the vaccine rollout front. So we think there's still possibly upside to come later in the year.
And we're tracking yield higher and higher. How tolerant do you think the Fed will be? Is there a level that perhaps that the Fed would be worried about?
I think it's difficult to put a level in terms of which level the Fed would be worried. But I think overall, generally speaking, we do think the Fed officials would err on the side of caution, given uncertainties surrounding the virus situation as well as the vaccine rollout. So we do expect the U.S. monetary policy to remain accommodative both on the rate side, and we don't think they were going to talk about the tapering anytime soon. I think they still understand in near term the downside risk to growth is still significant, and they want to make sure there's enough policy support to the economy.
Now, Sylvia, just to bring that full picture, you mentioned earlier growth will be above trend this year. It's going to be an earnings-driven story, not so much a valuation story. The other side to that argument, though, and I really want to see what you think about this. A good example, the World Economic Forum in Singapore was just moved a couple of months. We don't know if the Olympics are happening, and that's in 4 months. What degree of confidence can we attach to any outlook beyond May of this year that gives us confidence that any of these forecasts on earnings, growth, will hold beyond the next quarter?
I think that's a very important point. I guess a lot of the uncertainty or concerns is on the virus front and the vaccine front. But I guess what's important to us is that if we do have delays, we think that probably is not a big problem, especially if we're just talking about a couple of months of delays. I think market can definitely look through that. What could be more concerning to our mind is that if we do have any concerns on the efficacy of the vaccines, especially to the new variants we're seeing coming up recently, we think that probably is the bigger concern that would definitely put into question this kind of recovery expectations we have in the second half of this year. But so far, I guess the evidence does suggest the vaccine efficacy do hold even with the new variants.
If there is a lack of clarity there, Sylvia, it begs a question where risk assets go from here, where EMs go from here. I think we heard from Morgan Stanley saying that perhaps EMs may have already peaked this year.
Yeah, I guess we would take a different view, just given our underlying macro outlook. We think that above trend growth is definitely our environment that's positive for EM. And also, I would say within EM, we do see more room for catch-up in some of the smaller EM markets, such as LATAM, where they are likely to benefit more from the vaccine rollout and economic reopening. And I guess another factor that could support EM is really our U.S. dollar weakness view. That's our medium-term view. We think that could also support EM equities.
Okay, and I guess just to build on that as a final question, Sylvia, if the preference is cyclicals and within EM, you mentioned LATAM, does it also mean the preference within Asia is cyclical heavy markets like Southeast Asia away from sort of tech and internet heavy markets like Hong Kong, for example?
We definitely would say that cyclical preference is for our overall equity allocation. Within Asia, definitely we would prefer the more cyclical markets. But I guess Korea also could be a quite good pick, given their exposure to the more kind of commodities-based exports, so the petrochemicals, and also the exports of memory chips. That's also quite related to the commodity cycle. So Korea could also be quite favorably positioned in terms of the cyclical exposure.